Are you prepared for what's going to happen in 2026? The Tax Cuts and Jobs Act is going to expire. So what this all means is that tax rates are going to go up here in a few short years. And so the way this works is that in 2017, President Trump enacted what was called the Tax Cuts and Jobs Act. What that did is lower taxes from 2017 to 2026. So what that means is right now today, we've got lower tax rates. We've got taxes that I call are on sale right now. And so we've got an opportunity to pay our taxes now at the lower rates so we don't have to pay them in the future at higher rates. And come 2026, those rates are coming back and they're going to be higher than what they are currently. And so that's what we know is going to happen in the short term. But my question to you is, what do you think are going to happen to taxes in the long term? What about 10, 15, 20 years, knowing how much debt our country's in right now? Knowing that we're continuing to spend and spend and spend, and knowing that Social Security is underfunded, Medicare is underfunded. What do you think are going to happen to tax rates in the future? And I'm not here to give you an answer because no one truly knows, because the tax code is written in pencil, but we can all assume, and most experts suggest, tax rates can only go up from here. And so if we know that's the case, what have you been doing now? What have you been doing the last 5 years, knowing that we've had these current tax cuts since 2017? And we get a lot of people that come in and see us that have been working with advisors who they have not done anything the last 5 years, but their advisor says they're doing tax planning. Some advisor will just say simply, we don't do tax planning, go see your CPA, right? At least they're honest. But if you haven't been doing this, you're missing opportunities. And so the point of this video is obviously not to beat anyone up or to make you feel bad, but the point is to motivate you to know that, hey, since you have missed opportunities, we need to get going, because we can't change the past, but we can change the future. And we do have some short years here left before this tax sale expires, before this Trump's tax cut expires, that we can take advantage of. And so we want to encourage you to start acting on this. Start looking at different strategies to do this. And so what are some things that you can start looking at today to accomplish this? One of the big ones that we've been doing with a lot of our clients is utilizing these low tax rates by doing things like Roth conversions, by making sure that we can convert money from our IRA or our 401k over to a Roth, which you can see other videos that I've done on that, to make sure that you're paying the least amount of taxes possible. Think about it this way. In today's current age, if you're in the 12% tax bracket today, come 2026, you'll end up being in the 15% tax bracket. If you're in the 22% tax bracket today, you'll be in the 25% tax bracket. And if you're in the 24% tax bracket today, you'll be in the 28% tax bracket. And so, I ask a funny question, but it's very real. Would you rather pay 12% today or 15% later? 22% now or 25% later? 24% now or 28% later? And if you're like most people who would like to pay the lower rates, well, now's your time to do that. Because we know we can pay it now at 12% or we can pay it later at 15%. And at the end of the day, the choice is yours. And if you say, I'm not going to pay my taxes right now, then that's your decision, and you'll live with whatever that is, if it's good or bad. But in my opinion, we're not acting on information that we know on. We're not being tax smart, right? I mean, why would we wait to pay it at a higher amount when we don't believe that tax rates will ever be lower? Unless you think tax rates will be lower, maybe it does wait to delay, right? And for some people, it could make sense to delay paying taxes, right? If you expect to be in a really low income bracket in the future, maybe you shouldn't pay your taxes now if you're still working and making $200,000 a year. If in retirement, maybe you haven't saved as much money, your R&Ds aren't going to be as much, maybe you're not going to work at all, maybe you don't have as big of a Social Security. Well, in that case, you may be in what's called the standard deduction and not have to pay any taxes at all. But if you have a larger amount in tax-deferred investments, like most people that we see, then you're going to have to pay a significant amount of taxes over your retirement by the government forcing you to take that money out through required minimum distributions. So what is a way around that? Like I mentioned, doing Roth conversions by paying your taxes now at these lower rates before you have to pay them in the future, where taking it out in the future, not only you have to pay it at higher tax rates, but you also have to pay maybe increased IRMA premiums, that's Medicare premiums, that's based on your income. You may have to force Social Security to now be fully taxable, which your Social Security could be tax-free if you plan the right way. But if you don't, then you could see the majority of it being taxed as income. And so there's all those little things that we have to plan for before it's too late. Things like Roth conversions can really help you there. So with that Roth conversion, that's, like I said, one of the most popular strategies that we're seeing right now. There's over 50 tax planning strategies we go through with our clients right now to make sure they're taking advantage of this. But our biggest advice to you today is make sure you're getting guidance on this. You know, if you're doing it on your own, make sure you're reading tax code every day, making sure you're getting up on this to see what other opportunities are out there, because there's a lot of opportunities that can really move the needle for your plan just by knowing what is out there. I often joke that, you know, everyone hates the tax code. No one's ever read the tax code. But if you actually open up the book, there's a lot of loopholes in there that are completely legal for you to take advantage of. And so what do you have to do? You have to either read that tax code and figure out those opportunities, or you need to work with an expert who does this every day. Someone who really knows that tax code that can help you plan appropriately. So make sure you're acting by 2026. We've got a window of opportunity here, and that window is shortly closing, and we need to make sure we're paying our taxes at the least amount possible is our goal and advice to you all today. Hope you enjoyed the video today. As an avid viewer of this YouTube channel, we would like to offer you a free copy of our new book that just came out called I Hate Taxes. So if you would like a free copy of this, then go ahead in the description below. You'll be able to click on a link to get that free copy of this new book, I Hate Taxes.